If you love picking gold and silver mining stocks, then my God, is this episode ever for you. Industry veterans John Feneck and Don Durrett bring their top picks to the table in gold and silver mining, why they're more bullish than ever on the sector, and why they see this moment in time as a massive buying opportunity. While both the metals and the miners take a big hit due to the war in Iran, not underlying fundamentals, which are stronger than ever. And as a bonus, you're going to want to stick around to the end of the interview where John goes deep on U.S. critical mineral names that he's bullish on right now. All of this and much more ahead. And guys, the newsletter's free. readplaza.com/commodity culture. The link is in the description. Sign up today. And now, here's John and Don. John Feneck and Don Durrett, it's great to have both of you on the show. Once again, I want to kick things off with both of your broad views on the silver sector. Wondering what you're making of recent price action. Of course, the metal taking a beating today alongside gold. A lot of speculation, of course, that this is tied into the war with Iran. Many people have different theories on why both metals have continued to drop in the face of the conflict. When it seems like it's on, prices drop. When it seems like peace is coming, prices rise. It's been interesting to watch. But Don, I wonder what your take is on silver specifically.
Well, first thing I want to point out is this isn't a story about silver. It's a story about gold. Silver is not going to lead. Silver's not going to go by itself. I always call gold big brother and silver little sister, because gold's more masculine and silver's more feminine. You can understand gold. You can't really understand silver. And so I always tell people, don't focus too much on silver, because you want to focus on gold, because that's really the story. That's really where if silver's going to go to 100, 150, 200, gold's going to lead. And so what are the driving factors for gold? I always say you can just ignore silver and fundamentals and even the charts. Everybody likes to look at the silver chart, right? The silver chart, if you look, like right now, gold is down 28% at 4,000, and silver's down 52%. And the reason why silver went down a lot more than gold is because it had a catch-up mode. Gold was leading. And then last year, silver went from 35 to 120. So it outperformed to such a huge amount that it's now corrected more. But it was that 28, and gold actually went down 29. That's as far down as it went. 29%. If gold goes down 29, silver's going down 40. But in this case, it went down 55%. Now, I think there's a chance that gold could go down a little more between now and midterms. And I've been saying this, expect another lower low than we just had, 39.50. But again, this is a story about gold. But the gold bull market, for it to break down, you really have to get gold all the way down below 3,000 and probably below 2,800 before the chart really starts to break down, if you will. That's how strong the gold market is, the gold chart. So I have very little worry that this gold bull market is done. So I consider this a correction. I think most people agree with me, both the TA guys that analyze everything and the people that are like me and John that are and analyze these things, that this bull market is definitely not over here. So this is a buying opportunity. I think the HUI, which I use to identify the miner values, is at 615. I mean, pretty beat up. It was all the way up to 989, so it's down 38%. And 615, that's pretty much, bouncing. I don't think we got much lower than this. So the miners, we haven't seen a 5 handle in the HUI in this correction. I think 615 is about as low as it's gone. So the miners have been absolutely obliterated. But this is a buying opportunity again, in my opinion. Buying opportunity. I could see the HUI going, the low 500s, but I don't expect a 4 handle. So we're kind of bouncing on the bottom here. Buying opportunity. We had 2 buying opportunities in June already. We went down to the 200-day moving average around 4,100, which is a buying opportunity. And then we turned around and we went down lower. We went down to 39.50, bounced a little bit, almost to 4,200. Now we're back to 4,000 because of the war. The gold hasn't really enjoyed this war too much. And so I I think between now and the midterms, I think we could go lower. And again, I just think this is a beautiful buying opportunity. I bought both of those dips, and now I'm waiting to see if if I'm gonna have to buy this one as well. I'm hoping the gold trends back up. We're talking a little about silver here, but again, it's a gold story. If gold trends up to say 44, 4,500, then silver will trend up maybe all the way to 70. But I think that's going to be a dead cat bounce. I could be wrong. So if we get any rally at all here in the next, 1 to 4 weeks, I think it'll be a dead cat bounce, and then you get into seasonality problems from mid-August to mid-October, and you're probably going to get another correction there. And I'll shut up.
Great thoughts. John, are you of a similar mind that the gold market is really what you should be watching when it comes to tracking silver as well? And just your overall thoughts as well on the silver market at these prices?
Yeah, I echo Don's comments on gold leading and silver catching up last year, right? The move in silver was extreme. You and I, Jesse, talked about that in Q4. We talked about it again in January, February. We also disclosed to your listeners that the Feneck Mining and Metals portfolio was 15% silver as of year end. So we were buying and holding, all the way through the rally. But then I was going on your show and others, probably a dozen shows, and saying over $100. I don't know where I'm going to be selling, but I'll be selling. And I sold 20% of my silver on the way up between 100 and 120. We're going to be buying that back just to let people know if silver cracks 50. If silver cracks 50 to the downside, and Don's target, at least last week when we interviewed together, was 48. Mine's 47 to 50, a little broader range. But I think you could see a dip below 50. It won't be long lived. 50 was the breakout, if you remember, the all time high from the 80s again in the 2011 and 12 rally. So I think that is the fact that silver is holding 50 is extremely bullish, because we don't want to see a major break below 50 and then have silver hang out there for weeks, right? That would be very negative, in my opinion. And then you could see lower prices, because the chart is not broken right now. The gold chart is not broken right now. People need to understand what Don said, which is we are in a bull market. And I know it doesn't feel like that. I totally understand. We're going to get to equities in a few minutes, I'm sure. And we'll talk about some of the carnage, for lack of a better word, since March 1st. But most of that price action, whether it's gold, silver, GDX, HUI, has been predicated by the war. And that is a temporary phenomenon in our view.
And I think it's important to keep things in perspective. Last year, when silver was in the $30 range, people would call you crazy for saying it's going to hit $50. And here we are about 60, and people are complaining about it because it's no longer in the triple digit territory. So, I mean, and a lot of these silver producers are still very profitable at these prices. So why don't we move there next? John, I'll stick with you on this one. Thoughts on the silver mining sector? Any silver mining stocks that you've got your eye on that you think could perform well up ahead?
Yeah, before getting into individual names, I think it's important for people to use ETFs where appropriate. Like SILJ is very handy. It covers a lot of the producers that Don may mention, and it's trading at a ridiculous valuation here because of silver's fall, and so at 24.50 SILJ, it's getting much more attractive than it was when it was 40 just a few months ago. So that's one to look at in the small to mid cap space. In the large cap space, we use SLVP, but you could also use SIL to get access to the larger cap names that are producers. But as far as development stories, that's something that I look at, and I know Don looks at too. I'll name a few development stories because these are like the next echelon of potential producers, right? And that's important if you believe that silver is still in rally mode. So the first one is Silverco Mining, and it's called SICO in Canada, SICOF in the States. Mark spoke at my conference in May in DC. Really sharp individual who's aggressive. Don and I both like aggressive CEOs that are going for it here, that see the opportunity. He's put out news on Cusi and La Negra here in the last couple of weeks, both positive releases about drilling these projects and building towards production, right? Where this in 2 years from now could be producing millions of ounces of silver per year. And right now it's not, right? But that's the opportunity. This stock is at $4.90 as we record this. It was trading at $11. I don't know, March. If you look at the chart, most of these stocks have sold off since March. And investors have to ask themselves, was 11 the real price or is 490 the real price? I would argue it's somewhere in the middle right now, and that presents a good buying opportunity in our view. Another one is BlackRock Silver, BKRRF in the States and BRC in Canada. That stock was at $1.75 on big volume at the end of March. They came out with an updated PEA. Take a look at their all-in sustaining costs, their AISC, extremely low versus peers in Nevada. And they just went on Kitco a few days ago and said, hey, we're going into construction next year. Like, this isn't something investors have to wait 5 years for. This is a U.S. story with over 100 million ounces of silver equivalent going into construction next year and then production probably the following year. So we like that one. And then lastly, I would mention Silver 47, which is AAGAF in the States and AAG in Canada, because they have the ability now post-merger with Suma to go into New Mexico, Nevada, and Alaska and drill all three of those projects year round, right? So like they have the ability to move those rigs, they're cashed up, and they're going to be putting out great exploration news. So that one's a little further behind in development than Silverco and BlackRock, but one that we like a lot here at 42 cents US. It hit $1 not too long ago.
The sponsor of today's episode is ARC Silver Gold Osmium. Owner Ian Everard is praised even by his competitors as one of the most honest and level-headed bullion dealers in the United States. They have some great prices. You can see some of them displayed right now on screen. Take advantage of these specials today by reaching out to Ian at 307-264-9441 or by email at ian@arcsgo.com. Make sure to tell him, of course, that Commodity Culture sent you. And now, back to the interview. And Don, your thoughts on the silver mining sector at present and any names you're watching?
Yeah, sure. I'll give a few. One thing I want to mention is that most people are investors, and investors try to make money quarterly or annually, but especially annually. Their focus is to increase their portfolio. And that's not how I invest. And the reason why is because I focus almost exclusively on gold and silver mining stocks. And they're very speculative in nature. And so I'm trying to get big alpha. So if you're investing annually, you're only going to get maybe a one bagger, 100% return, 50% return. I'm not after one baggers. I'm after five baggers. So I focus on 36 to 48 months, and maybe sometimes even all the way out to 60 months, but at least 3 years. For me, I'm not going to get a five bagger in 1 year. So no, that's not my focus. I don't want to make that up. Also, I consider gold and silver mine investing speculating. And for me, speculating is synonym for gambling. So we're gambling here. And so if you're gambling, expect to lose money. Period. Expect to lose money when you're gambling. The other thing I like to tell people is you can't pick winners. So if you're trying to find five baggers, good luck. You're going to have losers. So I always say it's like going to the racetrack. Each horse race you expect to lose, right? And it's no big deal. Go to the next race. It's the same for me. It's the same with miners. You're going to have losers. So you need to start with that mindset. So a lot of people who are investors, like they'll join my website, Gold Stock Data, and then I'll get emails. I want to cancel my subscription. I'm tired of this, or something to that effect, because they're investors, right? They're like, we've been down since January. All we've done is go down, 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 right? They're like, after a few months of this, most people are like, I can't, no, I'm done. I'm out of this. This is too much pain. So you have to figure out how you're going to invest. If you're going to be an investor in this, you really need to be a trader for these miners because they're so volatile. And trading is difficult. So for me, I try to get an edge. Like when I speak at Beaver Creek, I'm going to basically show people how I get an edge. Now, the way that I get an edge is I focus long-term first, And then I try to take all the factors out of play except for the gold and silver price. So as long as the gold and silver price trend higher, the odds are in my favor and I have an edge. So that's how I do it. Okay, so that's a overview. Since we're doing stock selections, I think it's good for people to know where we're coming from. So for silver miners, I'm going to give you two lists. One, we're going to start with the people that are investors who want to make money this year, right, over the next 12 months. So if silver and gold prices trend higher, you want to focus, I think, on quality producers. John mentioned 3 ETFs. There's only 4 silver miner ETFs. I think the only one he didn't mention was SLVR. And so the other 3 he mentioned. So I own all 4 of those ETFs. I own them for diversification. Since I'm going for 5 years and I'm going for speculation, I use ETFs for diversification. Okay, so if you're an investor and you want to try to make them over 12 months, I would go for the high quality producers. So that would be Coeur Mining and Hecla, which I think those are miners that are in good locations in North America that trade in New York that are going to get bought like candy because there's not very many stocks like this. The other 2, those have been my top 2. The next 2 below that would be Pan American and First Majestic. So those are kind of the 4 elite. So if you're really looking, or you can do the ETFs, but a lot of people can't buy ETFs. If you're in a foreign country, a lot of the foreign countries won't let you buy American ETFs, which is bizarre. So you have to buy these stocks. Now, developers. Now, you're going to use my strategy, and you're going to go for 36, 48 months developers, and you're going for 10 baggers. So I'm trying to get a 5 bagger, but I buy 10 baggers, and then they're not all going to be 10 baggers, but I can average 5 bagger. So those would be Honey Badger, which just acquired the Prairie Creek mine up in Canada, Northwest Territory. This was owned by a private company, and they paid $8 million US for it. I mean, it was just ridiculous. I remember saying that this is one of the cheapest stocks I've ever seen when they combined, and now it's kind of doubled or tripled since the acquisition. But they got that Prairie Creek project on a song, and it's still cheap. But again, these stocks are very high risk. I just look for companies that have good risk reward. And then if we get the higher silver prices, the odds are in our favor. I just want a bit of an edge. Next one is Andean Silver. They're not going to go into production until 28, but it's a restart project. That one there, we have to wait until like mid 28 before they're in production, but it's a real easy story. I mean, just a restart, low capex, large silver mine. I think it's in Chile. Could be in Peru, but I think it's in Chile. Next one, BMC Minerals, which a lot of people don't know about. It's in the Yukon. They're going to mine 32 million ounces out the gate of silver equivalent. That's a big silver mine. They have their environmental permit. Some people say that permit's going to get challenged. So until they actually get this thing under construction, there's some risk there. But big silver mines in Canada are rare. And here we have Honey Badger and BMC Minerals. The last one I'll mention is Silver Storm. They just went into production. But they have this San Diego project that's not getting any value. That's another 100 million. So those are my 4 kind of 10 plus bagger, 36, 48 month plays.
Great thoughts from both of you. I want to talk about gold as well. Don, you already touched on this. I think we can kind of put this question all into one in terms of the macro outlook for gold, as well as any gold mining stocks that you're looking at, as well as the gold mining sector. Because obviously, you touched on gold at the top of the show. You're expecting perhaps a potential further correction. Macro tailwinds behind the sector appear to be stronger than ever. And a lot of this sell-off could be a buying opportunity, as you've mentioned. So, Don, I'll stay with you on this one. Then I'll go to John. What are you watching right now in the gold mining space? Your overall thoughts on the gold miners? Would love to hear it.
Yeah, so I'm more bullish than ever, but it's because of my macro analysis. Now, some people think that AI and basically the Fed and the fiscal dominance is going to basically keep the U.S. economy intact, and that we're just going to keep growing. The GDP is like a train that never stops, right? And so there's no real reason to pivot over here into gold silver miners when that's a high risk area. Investors, high risk area. I'm just going to stay here with the stock market, which is working. And I don't see a recession on the horizon. Everything's fine. I have a completely different outlook on that. And so I always say that the only reason why you own a gold or silver miner is if you are not a believer in the US economy, that you're concerned about it to an extent that you actually see not only a recession coming, but a serious recession. And you can see that, and you kind of look at all the data points. You basically holistically weigh the cost benefit, the factors on the US economy. And I've been doing this for 20 plus years, and I've never seen cost benefit leaning towards gold, if you will. And the reason why is because the main one is the US bond market. So we have a $2 trillion budget deficit, and we can't seem to get it down, right? I mean, if they cut 500 billion to take it to 1.5 trillion, they would basically damage the economy significantly, right? So they can't cut 500 billion. So they can't cut anything. Cutting there's no solution there, and which is a major problem. And I've said that this is going to happen. I got into this, started buying juniors in 2004, but I actually believed in this problem that the U.S. was facing prior to that this is eventually going to lead to a doom loop. And so the bond market is really the kind of the big problem, and we call it the debt bubble, we call it the everything bubble. That's the big factor, right? But then if you start adding on kind of the problems, right? If you look at inflation, they've kind of given up on 2%, right? And we're not going to see 2% anytime soon. And so we have an inflation problem, which isn't going down. We have a high interest rate problem, where if you want to buy a house right now, 6-7%, and the median price is like $450,000. So the average person, we have a housing affordability problem. We have a cost of living problem, where I would say the bottom half of the country cannot even pay their bills. They literally have to decide, okay, what in the budget this month do we have to exclude? I mean, that's how bad it's gotten. The average family below 50% can't even pay their bills, and it's getting worse all the time because their inflation is outpacing income. Then you have the bank system, where private equity is basically locking people out and taking their money out. You have banks that have really ugly balance sheet because they have all these bonds that are underwater, and they can't sell them without a loss. So you have a banking in the banking system. So you have all these main sectors. Then AI is supposed to be the so-called savior, but AI, in my opinion, is a jobs killer. So right now, people are losing their jobs. Approximately 10,000 jobs a month are being lost to AI. And on top of that, companies are not hiring people. They're using AI instead. So it's like a double whammy. And eventually, businesses are going to become more efficient. But at what cost? So, and then on top of that, it just gets worse. All of the AI spending, these companies don't know what their ROI is. OpenAI, which is one of the bigger, OpenAI, they basically already told the public, we're not going to make any money until at least 2030. We're going to bleed money. The old, Amazon, Amazon didn't make money for a long time. But don't worry. Next decade, we'll start making money, right? So the ROI is kind of an unknown asset. But it gets worse. I'll finish with this. It actually gets worse. The gold, everything I told you about gold is kind of weakness in the U.S. economy. But it gets worse because the rest of the world has been slowly de-dollarizing, where they don't want to hold U.S. treasuries. So foreign buyers of our debt is decreasing, and they don't want to hold dollars on their balance sheet. So central banks, they're decreasing their purchases of treasuries, and they're buying more gold. Gold increases have been going up. China and India, gold purchases are going up. Middle East. So we have this trend of gold buyers, and why? You have to ask yourself why. The reason why is because the U.S. economy is a juggernaut. It's like 24% round numbers of the global GDP. And so if there's any problems there, if we go into a recession, everything that I've talked about, it escalates. It gets worse, worse, worse. So in many respects, it's a ticking time bomb for the U.S. economy because of our budget problems and our deficit problems and our debt problems. And the winner, the beneficiary of all that is gold. So it's really a philosophy. You have to kind of be anti-U.S. economy, pro gold, and you believe that, and I do. I think gold's the end. And you don't worry about timelines, time frames. You just buy the miners and wait. It's a waiting game. We're waiting as speculators. We're waiting for basically the thing to burn to the ground. If you really want to know the truth of it all, I'm waiting for the bond market to basically break. And some people say it'll never break. They can print, but no, they can't. They can't. We can't just print everything. That creates inflation and it destroys the economy, destroys the currency. So, the Bernanke thing where I was Greenspan, excuse me, the Greenspan thing that we will never default because we have a printing press, that's baloney. You can't just print everything you need. It doesn't work like that.
And gold miners that you're watching right now that could benefit from all of this you're describing.
Sure. So earlier I talked about the 12-month approach, so the high quality, the producers. So you can do ETFs, or you can look at some of the high quality producers. So the three that I wrote down is Equinox. I think Equinox Orla merger made Equinox an extremely strong company and highly undervalued. Next one I do West Gold in Australia. They're trading like a 6 multiple, a high quality mid-tier producer in Australia. And the next one, the one that has never really caught up is SSR Mining. They had some problems in Turkey, and they sold that project, by the way. And they got out of Turkey, but they never really come back. And now we have this big sell-off. So those are 3 high-quality producers. The developers, the 10 baggers, is 1911 Gold, which is going to go into production in Q4 this year in Canada. Talisker Resources, which is also in Canada, British Columbia, that's slowly increasing production, and the Next Gold Mining, which has they're building a mine right now. They haven't started building it, but they will start building it this year. And those might be my 3 developer choices. Thanks.
Great. And John, your thoughts on the gold sector and any gold miners that you've got your eye on right now?
Yeah, I wanted to echo Don's comments about the large cap. He calls it HUI, which is something that he tracks. I track GDX. GDX it's not super cheap yet. It's getting there. It's at 73 at the time of recording now, and 59 to 61 is sort of support for me. I think it holds. I feel that the upside in the near term would be 93 to 100 GDX. So we're kind of in the middle right now. It's a good risk reward, but it's not super, super cheap. The RSI on that is around 42 and a half. I'd like to see it in the 30s before I would add myself, but will be adding if it gets ridiculous. I already own a lot of GDX. It's our 3rd largest holding. Don mentioned Next Gold, NXGCF in the States and NEXG in Canada. I just spoke to the company Friday. They've got 7 million ounces of gold. They have the ability to pivot into either project in Canada. They've got a lot going for them. They basically in February, March built out the team in the field. So they're going for it. And I think the market is missing this. Like they have the ability to go into production where a lot of development companies are bluffing, in my opinion. They could actually get to production. So it's going to take a while, probably, 3 years from now. But I think that, if you're believing in what Don's saying about looking 1 to 4 years out, this is a great stock to look at because the stock's at 83 cents right now. It was trading at $1.75 a few months ago. I mean, again, assess to yourself as an investor, was 175 real or is 83 real? It's somewhere in the middle, probably. So you're still making a lot of money here at 83 cents, in our view. Two others that I really like: Triumph Gold, TIGCF in the States, and TIG in Canada. They have 2 million ounces of gold in the Yukon. You're starting to see a kind of a mini renaissance in the Yukon, Jesse, post what happened at Victoria Gold, because that was 18 months ago. If you look at Banyan since then, it's up multiples. If you look at Western Copper and Gold, WRN, up multiples from then. Like, these stocks are actually doing pretty well. And that region still has a lot of value in it. We think Triumph is one of the most undervalued names out there because they have 2 million ounces of gold with the potential, in our view, to get to 3 million ounces within next year. But they have a ton of, critical minerals on that same property that they're getting no love for at all. They have tungsten and antimony on that property. It's already identified in their filings. It's just that their last PEA was 2013. So, you're not legally allowed to talk about stuff unless it's in the correct format, right? Like, you can put out some, 100-page document that no client has time to read. But Don and I do that kind of work to find the little nuggets out there that have potential, right? And I've verified this with the company. So the other thing that they have is silver in Utah, which we think is, again, getting no value. It's never been drilled. It's going to be drilled this fall. They just need to get their final permits. So we think that could happen as early as September. And the last one is Denarius Metals. I went to two different site visits this year, Jesse, one in Colombia, one in Spain. I've only done 4 site visits in my whole career. I get invited every month. I'm very intrigued by the company. The ticker, by the way, is DNRSF in the States and DMET in Canada. They're going to uplist their Canadian listing to the TSX later this year. They realize that they're not getting the proper amount of liquidity some days in Canada. They're addressing this. But I think the biggest thing that they've addressed is their debenture overhang. This is something that, people like to talk about the positives, but sometimes you have to talk about things that aren't positive. And this wasn't a positive for the stock longer term. So they addressed it. They're dealing with it this summer, Jesse, instead of dealing with it next year or the year after, because they see higher gold prices like Don and I do. They wanted to get it out of the way. When they announced this debenture news, the stock was at 58 cents US. It's trading at 41 cents US at the time of this recording. It's already taken it on the chin for the news, but it was at 85 cents, 90 cents earlier this year. Again, another stock in half that has real prospects and is already producing in Colombia. So they're going into production in Spain within a few months. I'd say by, let's call it Q1 of next year, you'll see some good news flow out of the company. And that's what you look for as a value investor, not what the current revenue stream is, but what the future revenue stream could be.
Well, John, I want to stick to you here because we were discussing this off camera before we hit record today, and that is the U.S. critical minerals story. The U.S. Export-Import Bank and Project Vault have dedicated a lot of money, 112 billion approximately, to support critical minerals projects in the U.S. in recent months, but we haven't really seen that subset of the mining sector really move in response at this point. What are your thoughts there? What do you think is holding them back?
Yeah, what's holding them back, Jesse, is the same thing that's holding back gold and silver equities right now, which is the war. You can't control certain things as an investor. And that weekend leading up to March 1st, that was the peak for a lot of stocks. If you look at the junior market, I'd say 80% of stocks peaked right around March 1st. And so for those that say the war is not involved in this sell-off, are just flat out wrong. They don't understand how to do charting. I mean, the charts tell you the story. So if you look at tungsten, for an example, which is a serious critical mineral in our view, one that we've invested in equities for 4 years now, this is something that most people can't even spell, right? 80% of it is produced in China. The other 5 or 6% is produced in Russia, North Korea. Then you've got Vietnam producing some. Like, when you add it all up, it's almost 90% of countries that aren't going to give us 1 ounce, right? Like, I mean, we're at war. This is a wartime situation. These tungsten mines were really mined heavily in 40s and 50s in the US. So you have to look for equities in this space, Jesse, because you can't buy a tungsten tracker. Like, there's no ETF. You can't buy it in the futures market. There's no futures market. Yet the spot price is going ballistic. It's up 8 or 9 times from sometime last year, but year to date, it's gone from 920 to, let's call it, 2,800. I mean, a nice move in spot price, right? But the stocks are down in many cases. This makes no sense. So we're buying equities in this space hand over fist. I'm putting, 20% of our portfolio is in tungsten equities right now. And that is Western Star. I think is the most undervalued of all of them in the U.S. It's trading at 22 cents U.S. WSRIF in the States and WSR in Canada. If you look at the recent news, they picked up a New Mexico mine back in June 15th. Really interesting because New Mexico kind of flies under the radar in the States. You know, Nevada, Idaho, a lot of these states get more credit for moving projects forward. But this one actually has history of the U.S. government being involved in supporting this project. So, you know, Blake Morgan, the CEO, has already gone to the U.S. government and talked to them about, hey, can we get some non-dilutive funding for this, right? That's a catalyst. We like their Nevada property even better. That has historical grades of over 3.3% tungsten. When you look at the average grade, it's about zero point 0.2 or 0.3%. This is 10 times the grade, right? Like we have identified with the CEO and other people in the company that stock's been naked shorted. And we love opportunities like that because these guys are predatory. They'll come after a stock and they won't leave until someone flushes them out. So hopefully interviews like this will help flush people out that are making money hand over fist. I mean, the stock's gone from 65 cents to 22 cents here in a couple of weeks. And they're just taking advantage of this wartime scenario, Jesse. It's unfortunate for the company, but a great buying opportunity for investors. And the last one I'll mention in tungsten is Spartan Metals, SPRMF in the States and W in Canada. They also have projects in Nevada and New Mexico. They made a major acquisition in March of what they call the biggest, undeveloped, tungsten asset in North America, at least in the US, because I know fireweed is pretty large in Canada as well. But Spartan's at 32 and a half, 33 cents bid right now too. I mean, the stock was at 65 cents, not long ago. So sometimes the spot price and the equities are disconnected, and we're seeing that in tungsten equities right now. And I just wanted to mention one more that I thought was interesting that approached me recently. This is a North American story, so it's Canadian, but it's called First Phosphate, and that one is FRSPF in the States and the symbol PHOS in Canada. They're trading at 98 cents bid when we record this. It hit $1.50 US here not long ago at all. They did a financing though, and as you know, Jesse, when financings happen, stock usually takes a 10 to 15, 20% hit. This one took a much heavier hit because it was a relatively large financing, but it just closed today when we're recording this. So I think the pain in that stock is pretty much over. If you look at their news flow and their website, which is firstphosphate.com, it's amazing. I mean, they come out with news regularly. John's a very aggressive CEO. He's putting out, really high quality material for people to look at on the LFP battery market, which you can't draw a direct comparison to tungsten. But again, the LFP battery market is 90% run by China. Like I love investing in North American stories like this, Jesse, because it's only a matter of time before the US government, the Canadian government, and other governments understand how far behind we are in this race.
Great insights from both of you today. Very much appreciate you coming on the show. You've got some exciting news coming up. You have a conference in September, just before Beaver Creek there in Tempe, Arizona. And both of you will also be speaking about Beaver Creek. So John, why don't you walk us through these developments?
Yeah, sure. So I got into the conference business 3 years ago because I identified the need for not just investors to learn more, but for companies to meet quality investors. I found that there's a real problem at the conference level for companies that are going there and getting pitched on social media services, getting pitched on flow through. Some of these guys don't need any of that stuff. They want to meet with investors, right? And so that's what we do. It takes a lot of work to screen, but we screened out about 70 people in May when we did our Florida and Washington, D.C. events, Jesse. And so, Don and I live close to each other here in Arizona, and I said, why don't we headline something in September right before Beaver Creek where investors can come west for a change because all of my stuff is east or in Europe. And this is our first one in the West. So we're hoping that the investors will take a look at attending this before Beaver Creek as they're headed towards Colorado. I still think that Beaver Creek is the best conference in the US for juniors by far. So if you want to make a week of it, you could come to our conference September 18, 19, 20, and then literally get on a plane on the 21st and fly to Beaver, which starts that night, and spend a few days there. And if you have a problem getting a pass and you're an accredited investor, you can email me at john.feneck@yahoo.com, and I'd be happy to try to help you with the other conference because Don and I are both speaking there, and they're great people, and it's a great experience. My first time in 2019 was very, very memorable, and it was kind of a springboard for my consulting business, Jesse. So I owe them a lot.
Awesome. Well, where can people get tickets to your conference, the one before Beaver Creek?
You can hit me up at that same email address, or you could go to info@topshelf-partners.com, and that email will also help you out with, getting either a free pass or, a paid pass if you don't want to participate.
Great. And Don, tell us about goldstockdata.com.
Yeah, so if you don't own any gold, silver mining stocks, then go to Amazon and read my book. If you have any interest in it, you think you might, my book will give you a really good understanding of what the gold, silver miners are all about. It's very thorough, if you will. If you do own any gold and silver mining,
what's the book called? I'll put a link to it below.
How to Invest in Gold and Silver. A complete guide with a focus on mining stocks is the subtitle. But yeah, just go Don Durrett and look for the gold book. You'll find it. Yeah. So yeah, and if you do own mining stocks, I have one of the better websites for you to look for potentially additional stocks. It's almost 900 stocks, so I basically have all of them. So whatever you want to search for, say, okay, give me all the mid-tier producers. I want to look them over, and then I give all the data that goes with them. So I built it for us, for gold and silver mining investors. So it's built by a mining investor for mining investors. But thanks, Jesse.
Awesome. I'm going to put that in the description below as well. And John, quick shout out and description of Feneck Consulting, what you've got going on there.
Yeah, it's feneckconsulting.com, and we're very pleased to have put up our 10-year anniversary on the portfolio as of January 1st of this year. It took a lot of work to get there. It's not easy in this sector, as Don and I pointed out on this interview. So a lot of times when you feel like you have to throw in the towel and just do something else. I've had a lot of my friends say, "Why didn't you get into tech?" or "Why didn't you do this with your career?" It's like it's a challenging sector, but that's what makes it so interesting to me, is that when you look at the investable universe, Jesse, of stocks, we are 0.1% of that investable universe. When you add up the market cap of all mining stocks, it is insanely small. And technology as of December 31st in the S&P was knocking on 40%, right? 400 times as big. I mean, I'm of the belief that you're going to see mining stocks become more of interest. Bank of America just put something out 24 hours ago saying that the large cap miners back in 2020 were 10 times less interesting from a free cash flow perspective. If you look at the earnings of the companies, some of those companies that Don gave you, or just look at the GDX holdings, that's a good barometer. A lot of these stocks are putting up insane earnings in January and April, yet here we are in July and everyone wants to sell. Like, this is the time you've got to work with a professional like myself or Don, do a phone call, join our services, come to see us at the September 18, 19, 20. We're both sharing our investment process, which I think is extremely valuable to people. We're doing that for free. So, people can come and learn, and this is the time to educate yourself.
Great. Well, there'll be a link below to Feneck Consulting, Gold Stock Data. John, your email for people who want to reach out about tickets to the conference. Gentlemen, as always, fantastic conversation. Thank you for coming on the show.
Thanks, Jesse.
Thanks for having us, Jesse.
Thank you for joining us today. This episode is brought to you by ARC Silver Gold Osmium. They have some great prices on precious metals, bullion products. You can see some of them on your screen right now. Reach out today to owner Ian Everard at 307-264-9441 or by email at ian@arcsgo.com. And make sure to tell him that Commodity Culture sent you. And sign up for the free Commodity Culture newsletter, where I go over the actionable investment insights from the interviews that I do, like this one today, bringing you my picks based on the discussions that I have with all of these great guests. It's free. Sign up now. Link in the description. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.